All right. So I was saying, one of the major reasons people lose in trading is too much of information. You know, you know that there are so many concepts in trading. Please mute your microphone if you're just joining, please. There are so many concepts in trading, and there are so many approaches, so many strategies. So if you start trading, maybe from you started with someone who was teaching you price action, or you were just following price action videos, maybe on YouTube or wherever you, maybe ebooks or whatever, then unfortunately you seem not to really understand some of the little things inside that, maybe that course you were following up. Then along the line you find someone else who seems to be successful in smart money concepts. You'll be like, and the person, maybe if you come in contact with the person, is going to tell you, if you do not know smart money concepts, you won't know any, forget about it. Smart money is the only way to succeed in trading. The only way you can make money in trading forex. You see, so you as a human being, you want to make the money. What will you do? You would want to digress. Now you want to try smart money concept. You will abandon price action that you were learning. You go to a smart money concept and you start learning, and maybe maybe fortunately or unfortunately you find yourself in one Telegram group, and in that Telegram group you see people posting their results and people dropping signals. You'll be like, this guy's been dropping signals, so let me contact him. How much will he charge to teach me which concept, what kind of approach is in? It's going to tell you, I am trading Falcon. Oh. If you want to learn, I'll teach you the Falcon. You jump to Falcon now. So you discover that at the end of the year, at the end of 1 year, you will not be successful in trading because you are just packing information from different people. You are not focused. You are easily distracted by whatever you see. All those results you see on Telegram channels, people posting, you keep on spending money. They will ask you to pay. You will pay, and some of them can't even teach you. You understand? So, and sometimes it's not even about the information you get. Some of you can even have that very good information. You can even have the best strategy ever. Some of you that are joining this live call now, I believe some of you even have a very good strategy that can give you money. But the problem is you. The problem is you in particular. Do you know why the problem is you? The problem is because you feel you should be making hundreds of dollars every day. You feel you should be making thousands of dollars on a regular basis because you see videos of people making thousands of dollars. So you feel that you're supposed to be making the same thousands of dollars. Because of that, you might enter a trade and you see some profit, which is reasonable. You wouldn't want to close the trade and go with the profit. You will be like, this person, I see the person used this strategy. You hold this trade and his trade will go this far. You make this amount of money in one trade. You can make up to $1,000, and I am here struggling with 20. You won't want to. You see, that mentality alone is what has made so many people stay for years without being successful in trading. That mentality is very bad. First of all, you that is thinking the other person is flipping accounts with from $5 to $100, from $5 to $500. Do you know how much that person has? You that is struggling to even fund, maybe you're doing a job, you are getting paid like 50,000 naira a month. So many people are paid $20,000, 20,000 naira a month. So many persons that are even struggling to trade, their salary is not up to even 25,000 naira a month, and that is from that account. That's little money. That's where they used to fund their account to trade. How much can you fund? You end up funding maybe $5, and because you've been watching somebody who is flipping a $5 account to $100, so you go to fund your $5, the little $5 you manage to fund, and then you want to also flip that account. You will blow up that account. In fact, the first trade can blow up that account because the person you saw, because the person you saw that made that video, you understand? The person that made that video, do you know what the person does? The person has a lot of money, and the person cannot just tell you, will not want to tell you how many times he has tried to flip $5. Then the one that is successful is the one he posts on YouTube. You can just have maybe like $50 to spend, then split it to 10 places, and he funds his account $5, $5. anyone that gives him what he wants is the one you will see. You won't know how many times he has lost. So you with just your small $5, you go and fund your account and you want to start a flipping account. That's one mentality that is very bad. You know, if you following my some information I post in my Telegram channel, I am not too active, in posting stuff. But if you've been following, I used to tell you, if you are in Nigeria and then you have up to, let's say, $50 on your account, your trading account, or even it is $30. Okay, let's say you have $50. Guys, if you can make $5 per day, if you can just make $5 per day and you stay disciplined and you allow yourself, forget about whatever you see on the chart, just wait for a perfect setup that can guarantee $5. Just one trade that can give $5. You enter the trade, and at the end of the day, you make your $5. $5 now in Nigeria, you know how much it is? It's about 8,000 naira. Then let's say you are able to do this for like 1 week. In 1 week, you would have made like $35. Then if you multiply that by the current exchange rate, which is about 1,600, you'll be making around that kind of 35,000 naira. Which place will you go to work to get 35,000 naira with just a little, without stress? Okay, let's say you're able to make just $10 in a day. $10 in a day. At the end of the week, you're making about, so even over no 8,000 times 7. 87 is how much? Is about 50 something thousand. That's about 54 or 56,000. Then if you're making $10 a day, if you can make, which I am very sure is very possible to make $10 a day, $10 a day, you will end up making $70 in 1 week. Then if you multiply that $70 in by the current rate, let's say by 1,600, you will end up making over 100,000 naira in 1 week. I mean, you here in Nigeria, how much can 100,000 naira do for you? What can it help you to do in 1 week? It will do a lot of things. But the problem is that you won't even want to stick to that small $10 because it seems to make you feel you are not even doing anything. All those things you see on YouTube and on Telegram, groups, people posting results, is the problem that is really affecting so many of us here, so many of you. So I want to change your mindset. Change your mindset. Try to think of making something reasonable. Like, think of making, even if it's $10 in a day. Fund your account, have at least $50, or if you can fund $30, then you target, even if it is $5 a day, then be successful with it. Then once you know you are successful with that one, at the end of the week, your $30 account, which you use to target $5 per day, you end up making over another $35 to add to it. It's going to be $65. That $65 now, you know what's going to happen. That $65, then you start targeting $10 per day. Guys, you'll be profitable. Now, let me not sound as if it is 100% that every day must be profitable. But if you follow a working strategy, if you follow a working system, even if you'll be having some losses in some days, but trust me that at the end of the week, you will make at least $25 if you're targeting $5 per day. And you follow a plan, you discipline yourself. There is no way you will not make an extra $25 a day, guys. So it's not about seeing strategies. There is one guy I know. He usually you see, you can just come online, show some videos about the trades, and he's always trading on the 5 minutes time frame. 5 minutes time frame. I want to tell you guys what people don't know. He won't even show any analysis. What you will see in his video is maybe a 5 minutes time. You just see the 5 minutes time frame or 15 minutes time frame where he's taking the trades, and you enjoy seeing the profit he's making. Please mute your microphone, guys. You will enjoy seeing the profit that he's making. Now, he has not explained to you what he actually did on the background before even coming to take this trade. So you that is saying, you just say, he will tell you, mark this, you draw your trend line here, draw your support here, and I'm going to enter my trade here. He entered multiple positions, boom, the market goes his way, and he closed them with some good profit. And you'll be feeling, wow, you will just go now to your MT5. Go to the same time frame you saw him doing, and you'll find a setup that looks like what you saw in his video, and you enter a trade with your money, and the thing goes a different way. Because he did not explain to you what he did initially, the analysis he had done from a higher time frame to confirm that the market will actually go in that direction, regardless of that setup you are seeing on the lower time frame. Because if the market wants to buy, guys, forget about whatever setup you see that indicates a sell. What setup you see on a lower time frame that indicates a sell, the market will buy. So they won't tell you all these things. And those are the kind of videos you will enjoy watching. You'll enjoy watching those videos because you like seeing accounts being flipped. You see, so I always try to advise you guys, you try to reduce your greed level and try to learn a very good information that can help you get the information that can help you succeed in trading. People have bought cars, bought houses, traveled everywhere. So I'm not supposed to be, time is almost 23, is about 25, 23 here. So I will just want to go on the chart. I want to show you one simple concept that you might practice. It can also help you be profitable. Let me share my screen, and please, can you see my screen? If you can see my screen, type in the chat. Just type yes in the chat. Type yes in the chat. You can see my screen. Okay. All right. All right. Thank you. So now what we are going to look at today, you guys already know my strategies. So I don't know if I should go. I was thinking of maybe handling some stuff about resistance and support, because it's one of the basic strategies you will need to learn. It's one of the basic strategies. You already know my strategy. I trade continuation and the reversal patterns. Continuation and reversals. Those are the things I trade, and they work for me so well. And I don't know if anybody has any problem with that, like any issue trying to understand that strategy. But I bet you this is not the best place to, teach you that particular strategy. This is not the best place to teach you, because we don't have, we won't have enough time to discuss it. So what I'm going to, show you today that you might want to, consider adding it to your knowledge of trading is support and resistance. You see, support and resistance, a lot of people look at it as it's too simple, it's too basic in trading. They see it as a too basic idea in trading. And because of that, they want to rush to learn those big terms. Like those terms in ICT and smart money concept. They want to speak big terms like fair value gaps, breakout block, order block, inducement, all those terms. That is what people like. You see them in groups, you see them posting, writing. So you ask how much has these terms made for you, But this simple support and resistance, these people are making thousands of dollars on a regular basis with this simple support and resistance trading. So let's just look at it. It will help you. All right. So you know that normally everybody knows what support is and what resistance is, but there are things you need to consider when we are talking about support and resistance. We have to consider key levels too. Key levels like where market has reacted multiple times in both directions. Like market has bought and sold. Like here is a key level. Here market sold here too. Market has sold it to and is buying here now. So this is actually a key level in the market. When we see a key level, we have to always take note of it and know that there is a very high chance of the market coming back to retest that particular level. And anytime market gets back to this level, there's a very high chance of market reacting on getting back here to this level. Like now, if the market gets back here, there's a chance it's going to buy to the upside. So you take note of these zones, especially on a higher time frame. Especially on a higher time frame, it is very good that it is in fact advisable that you do your top-down analysis. Mark out all these kind of key levels when you find them on a higher time frame before going down to a lower time frame, because whatever you see on a lower time frame has a very high chance of misleading you, giving you false information. But the higher time frame will always, give you a more accurate information. So you learn to mark out your support and resistance. Just the best thing to do is to zoom out your chart. If you zoom out, you'll be able to extend to see a wider area of the chart. Like here, you can see that what we marked here is actually valid, and we can drag this down. Did somebody ask a question? Omar Brown, the distorted noise at this background is distracting. Omar Brown, why can't you just mute your microphone? Where is he? Let me check it. Okay, it's now muted. Sorry, guys. All right. So now what we see here, you can see if you zoom out your chart, if you zoom out, you will be able to see a wider area to give you a better idea of this particular key level that we are marking. Because if you just use, maybe you leave the chart to be on a normal this thing, like you allow it the same way you got it when you saw it when you opened this chart, you will see that you only will be able to view what is around here. So you may not know what to do, where to really place that trend line or a horizontal to mark that resistance or support or key level. But if you extend here, you will know that you have something, and this also gives you more confidence on the trend or the on the resistance or key level that you just drew. You see, because market has sold here before, sold from here before, you can see it bought from here before to buy from here, bought from here and sold from here, and this. So this makes it a very strong level. Anytime market gets there, there is bound to be a reaction. Either it can break above it, come back to retest, or it can just react immediately it gets there. So knowledge of this can help you understand what to do in the market. Now, if you keep on marking, let's take another one. There's another zone here. There's another zone here. You can see. So by zooming out, you are able to get these things very clearly. You can get these things very clearly. Zooming out, you can see these things. So first thing to learn here is you must always try to zoom out your chart when you are marking out your support and resistance zones. Zoom out, then you're able to mark out these zones. Just zoom out first. You're able to mark out these zones. Like here, look at here. We have this and we have this, we have this. Now, one of the things your question would be, how about these ones here? How about these ones here? How about these ones here? You can see. Now, this is another, remove them. This one here, they act as, these are like weeks. If you want to go to a much higher time frame, these ones are acting as weeks. If you go to the monthly time frame, though we cannot access the monthly time frame on this particular trading view, if we are able to access the monthly time frame, you will discover that what we have here are just weeks. What we have here, these are weeks, indicating rejections. These are weeks, because the most touches, we have the most touches here. So meaning this, what we have here are just weeks. Just like here, this is a week here, this is a rejection. So this is the best place to mark it. This is the best place to mark on this particular time frame. So after marking this on a higher time frame, you do a 4-hourly time frame, 24-hourly time, that is daily time frame. You go to the 4-hourly time frame, look out for some another support and resistance zones to mark. You see, you zoom out, mark them, mark them on all those time frames. You can see this is another key level here. Market sold and bought. Market sold and bought. You can see market bought from here. This is a buy around here. This is a buy here. This is a sell here. This is a buy. This is a sell. And this is a buy. So if you're able to identify these zones, if you're able to just open the chart, zoom out, and identify these zones, you are a step ahead. You are a step close to getting a nice setup for your trade or a nice entry, because if you're able to get this line, these zones marked out correctly, then market comes back to this zone. What will you expect? Let's say the market now gets back to this zone. What will you expect to happen? You notice market has been buying from this zone. This market has been buying from this zone. So once market gets here, what are you expecting? You're expecting market to buy, right? Then you see it gives you a confirmation it's going to buy. Then you place your trade to buy. Anytime market buys from this zone, where is the most possible place the market goes to? When it bought here, it got to this zone. When it bought here, it got to this zone. It bought from here, got here. It bought from here. You see, it got here. Meaning, if you can enter a trade and target just this zone here, there is a very high chance of being profitable. I don't know if you understand. There's a very high chance of getting the making some profit, buying the buying from here to this point, you know. Then in cases where the market decides not to reverse on getting to that zone, it can just come down here, then hit here, then comes back to retest here, then sells to the downside. Sells to the downside. So if you can just mark out these things, the next thing you will need to learn is candlestick patterns or chart patterns that also help you to know if the market is actually going to reverse or not, because it is not all support and resistance zones that markets do respect. If you understand some of the market movements, that is how you see the market gets to a particular zone. You know this market, it will most likely break through this zone. So you will just not bother yourself waiting to get a kind of a reversal. You know it's going to break, and there's a movement the market will make, and you know the market must, reverse on getting to this zone. So all those things are also important for you to learn. If you have watched my videos about my reversal strategy, I mentioned some stuff about I talked about impulsive correction. Impulsive correction. The market is approaching a zone and giving this kind of movement. I call this impulsive correction. That is, in case if the market was buying previously, previously, we impulsively, if the market was buying previously impulsively, then it started giving this movement here. It's still buying, but at this point now, what we have here is an impulsive correction. So if we see this kind of movement on the chart, guys, and the market is approaching a strong zone, a key level or resistance zones which you have marked previously, it is an indication that the market is going to possibly change direction. So what do, you just wait for the market to get to that zone. See, if it hits that zone, then start reversing. Then the market, I don't mean like starts giving us bearish candlesticks. I mean, on getting to the zone, you notice a kind of a change of character. Then market comes back to where it has sold previously. Maybe it gives you a kind of a pattern like, let's say, an ascending wedge or an ascending channel, or maybe head and shoulders pattern. Then the market is going to change direction. Gives me a head and shoulders pattern, something like this. Then you will notice that there is a change of character at this point. There's a change of character at this point, and the market now goes back, creates a head and shoulders pattern. And this is happening around a zone. If this is happening around a zone, guys, then just get prepared. Me. Please, can you hear me? Just indicate.
Yes, I can hear you. I can hear you.
Sorry, I think network started doing nothing.
Yes, sir, we can hear you, sir. Loud and clear. We can hear you now.
All right, thank you.
Yes, we can hear you now.
Thank you. All right. So I was saying, if the market gets to this zone again, then there's a chance you can make some profit. If you enter here, you can enter here aggressively, make some profit, and knowing, if you understand my reversal strategy, you will know that the market would possibly sell to the bottom of this channel pattern it created, or whatever pattern it created, So you make some good profit here, guys. You make some good profit here. Trading is not difficult. It's just dedication. Just dedicate your time, study these things, study and study and study. Backtest it, Backtest whatever you learn or whatever strategy you come across and you feel you would want to try it. Backtest it first, then try it with your demo account. You see you are profitable on your demo account, then you try to trade on your real account. Try to trade on your real account too. So what I'm actually saying in a sense is if market gets to a zone, there is no guarantee it's going to reverse and there is no guarantee it's going to break through it. All you need to see first is the movement. Study the movement of that market because it is the movement of the market that determines if it is going to break through the zone. The market can just come impulsively. The market comes impulsively. If the market comes to a zone or approaches a zone impulsively, there's a very high chance it's going to break through that zone. If you listen to what I'm saying, I did not say 100%. I said there is a very high chance. Now, when I say there's a very high chance, it's because most of the time the market will break through it, and some of the time, sometimes the market does not break through, even it moves impulsively. So if the market moves impulsively, like this is an impulsive movement, you see the impulsive movement. If it gets to this zone here, it can break above it, then come to retest here, then continue buying. And there are times that it will also happen that the market will just buy impulsively on getting to this zone. You know what it's going to do? On getting, you start consolidating here. It will start consolidating at the end. What it does, it reverses. That's what it can do. So you always have to watch out for what kind of what the market does when it gets to a zone. If it is forming a pattern there, if it is actually consolidating, or if it is trying to break above. If it indicates you see the momentum and you see that the market is possibly going to break above that zone, all you need to do is to wait for it to break above successfully, then wait for a retest. Wait for a retest. It is very advisable you always wait for a retest when there is a breakout, because there are times the market can just trick you into entering a trade thinking it's actually not going to come back to retest. But you're surprised that the market will travel a very long distance and still come back to retest that zone, and this time around it will buy above where it stopped before coming back to do the retest. Now, it is not as if you cannot enter a trade after a breakout without waiting for a retest, but it's too risky. To be on the safer side, you need to wait for the market to do a retest, and you need to discipline yourself to always wait for the retest. You can just tell yourself, if the market breaks through this zone, I want to see a retest before I would want to think of going into trade. Just discipline yourself. Tell yourself you want to see a retest, and once the retest happens, then you go into trade. It's an act of discipline. It's an act of discipline. But if you cannot discipline yourself, then whenever you see a trade, whenever you see an opportunity, like the market breaks out and doesn't come back to do a retest, you will just jump into the trade. And because maybe you might be trying and it works for you sometimes, so you think it can work all the time. You won't even know the one that won't work for you. Maybe it's the one that's going to wipe the whole of your account. So to be on the safer side, you wait for the retest. Even when the market comes to the retest, let it be that it has given you, there is a strong confirmation that the market wants to buy or wants to sell or wants to continue in that initial direction, the direction of the initial movement before you go into trade. You understand? Before you go into trade. So many things are involved. Let me illustrate it here. Like we have a zone here. Now the market came here, let's say broke above this zone. Now we have to wait for the market to come and do a retest, then we get a confirmation, then we buy. But let's say the market also did something like this. On getting to this zone, it breaks above it, then it comes back to do the retest. Instead of retesting here to continue buying, it comes down, does something like this, and sells to the downside. It happens too. You see, so if what I mean here is that there is no guarantee that if the market is coming back to do a retest, that it will always give you an opportunity to continue the trade. You might just jump to enter. Maybe the candlestick just closed here, and depending on the kind of candlestick pattern you are seeing, that is the market closed on this zone, it might continue selling to the downside. Meanwhile, you are entering a buy trade and you see your money going in losses. Maybe on getting to this zone and it starts buying back, you might think the market is coming back, is going to buy. You don't know it's coming back to do another retest right here to continue selling. After all, this is the head and shoulders pattern here. You see, so what you will actually do to be on the safer side is to always wait to see the kind of candlestick pattern the market is forming on coming back to do this retest. Wait to see the kind of candlestick pattern the market forms. Is it forming, let's say, any reversal candlestick pattern, like maybe the bullish engulfing candlestick pattern? If it forms a bullish engulfing candlestick pattern here, then there is a guarantee that the market is going to buy. Then you enter the trade and buy with peace of mind. You can target here as your first TP, or you can allow it to go depending on what, based on your analysis already on a higher time frame. You know where the next resistance zone is, so you will target there. You know, so you will always wait to see the kind of candlestick pattern that is formed here. If the market comes here and doesn't give you any candlestick pattern that indicates it is going to change direction, I urge you to just stay out of the market. Don't try to trade. You will end up losing money, because things like this make people lose money. Things like that make people lose money. Until you are sure of the setup, do not enter a trade. You need to see what you must always tell yourself. I don't know. I'm trying to find whose mic is.
Yeah.
Mr. Abayomi, please, can you just mute your mic? All right, thank you. So that is it, guys. That is it. It's a very simple thing to do. It's a very simple, it's not difficult. This thing requires practice. This thing I'm telling you requires practice. So with this resistance and support, you can always make some good profit. Just with resistance and support. And when you mark out this resistance and support on a higher time frame, do not just think that is all. There are some other little resistances that you also find, resistance and support on lower time frames. The resistance and support you'll be finding on lower time frames will help you to avoid some floating losses when you enter a trade. For example, now you find a trade, say market got to this zone, and the market is supposed to give you, and you want to buy. It broke above, came back to retest. Let's say you see the market gave you an engulfing candlestick pattern. This engulfing candlestick pattern, what you expect is the market to do what? Sorry. You expect the market to buy immediately on the close of this candlestick. But unfortunately, you might see something like this. The market might want to, sell first and then decide to buy. Now, if you have a small account size, then you enter the trade on the close of this. Then maybe you open more than one position and you not even take note of try to confirm what if your account size is able to carry in case the market goes against you. You end up losing some money, and sometimes you won't even lose, you won't be in deep loss, but fear will make you to close that trade. Why? Because why would this would happen is because this bullish candlestick might just be closing on another small resistance here. There might be a little resistance zone somewhere here, or maybe on a lower time frame that you did not notice. So the only way you can avoid that, the only way you can avoid that kind of loss is to know that there is a very high chance the market would have to sell to the downside first before it buys to break above this. So you just wait. You just hold on. I think I did a video recently that when I was showing you guys why sometimes the engulfing candlestick pattern might fail you. Is because there's another zone above it. You have a bullish engulfing candlestick pattern, the market just formed it and you enter a trade, not knowing that it is just resting on a resistance zone. So you don't expect it to easily just break the resistance zone. It will have to sell for a while, then come back to buy, if at all it's going to even break above. So you need to take note of these things. The direction of the market on a higher time frame is very important, and the internal resistances you will have on lower time frames is always important. Is also important to look at. It will help you avoid some losses. It will help you avoid some losses. I don't know if I'm making sense here. I've been talking alone for the past how many minutes now? Does anybody have anything to say, or am I confusing anybody, or does anybody have a question?
It's clear. It's very clear. Very clear.
Okay. Okay. So we, all right, thank you. Thank you. Let's proceed. So like I was saying, let me just go to the chat and show you guys some of these things I've been talking about. Let me go into the chat. All right. This is the, for some of you, I know you like boom and crash, but I'm not sure we'll have that time to look at all those pairs today. Let's see what happens anyway. Okay, so this is the 4-hourly time frame, and you can see what market has been doing on getting to these zones. Now, you see we have a bullish engulfing candlestick pattern, and each time there is a bullish engulfing candlestick pattern, and the market has a space. That is, there is a space before the next resistance zone. Let me show you guys. There's one strategy I used previously. Whenever I see a bullish engulfing candlestick pattern, I know the next candlestick will always be bullish. You understand? That's a little concept. You can practice it, and I'm going to tell you now. You can use it to make some money. You know, very simple money every day. Now, look at once. What you will do is you come to the chart, you mark out your resistance and support zones. Now, what you are looking out for is the engulfing candlestick pattern. When you see the engulfing candlestick, you want to see it formed on your resistance or support zone. When you see the bullish engulfing candlestick pattern, like here formed, you see it forms on a support zone. And the next thing you will confirm is the nearest resistance zone. You see that the nearest resistance zone is far from the close of this bullish candlestick. Guys, you can take a trade. You can take a trade, a buy trade. Put your stop loss below this, the wick of this candlestick, then buy and target this high. It works almost all the time, guys. It works almost all the time. Except the market, just take note of what I'm telling you now. First of all, the first thing you need is the engulfing candlestick pattern. And the next thing is to check where it is being formed. Is it forming, if it is a bullish engulfing candlestick pattern, is it forming on a support or is it forming on a resistance? So if you are seeing a bullish engulfing candlestick pattern, make sure it is forming or it's formed on a support zone. Make sure it's formed on a support zone. Then the next thing you're going to look at is the distance from where this candlestick is formed to where the next resistance zone is on that particular time frame. So once you notice that, then you can say the market will mostly buy to target that high. This is the same thing that happened here. Now, this is the nearest resistance zone. It was too close. You avoid this. Forget about the fact that the market broke above this zone and continued buying. If you want to stay disciplined, once you notice that the engulfing candlestick pattern closed on a support and the next resistance zone is too close to your support, is too close to the candlestick, that the bullish engulfing candlestick pattern, guys, you can just skip that one. Wait for the one that gives you a little space. Like you have enough opportunity right here. See this opportunity right here. So you can just avoid the ones that closed that the bullish candlestick closed very close to the nearest resistance zone. And also make sure that the bullish engulfing candlestick pattern is not formed on a resistance zone. If it forms on a resistance zone, it is not going to work. Now, see what happened here. This is another strategy here too. This is a bullish engulfing candlestick pattern. It formed on a resistance zone, right? This is a bullish engulfing candlestick pattern. It formed on a resistance zone. Market has been selling from this zone, you can see. So the market, for it to form at this point, is a wrong signal. You don't need to try trading this particular pattern here. Don't try to buy at this time. You will lose a whole lot of money. You might even blow up your account. So what you do is to avoid this particular one to buy. The only thing you can do, if you're really sure that this particular pattern is formed, this bullish engulfing candles pattern is formed on a resistance zone, is to look for a sell trade. Now you'll be trading against that pattern. You know, so you can just tell somebody you are selling after seeing a bullish engulfing candlestick pattern. The person will be like, no, you must buy. Bullish engulfing candlestick pattern only allows buys, not sells. But because of where you found it, you must not buy. If you see here at this point, you must not buy. Sell. Comment, guys. Once you find it here, do not buy. Sell it at this zone, then you'll be in some profit and you step out of the market. That's an idea, guys. That's an idea. So I advise you to always try to identify where you find the bullish engulfing candlestick pattern. For example, there's another one right here. Oh, sorry, let me do this. See another bullish engulfing candlestick pattern here. See another one right here. You can see the market bought from here up to this level. It formed on a support zone. I don't know if you are getting that idea. If you understand what I'm telling you guys now, just type I understand. Type I understand in the chat. Type I understand. Good, good. All right. So I'm impressed. At least everybody understands what I'm talking about. It is just another way of, it's a strategy on its own. It's a strategy. So if you've been finding difficulty trying to learn other strategies, you can just practice this one. You can practice this one and it will work for you guys. You don't need rocket science to do trading, to trade and be profitable. Just learn how to mark your support and resistance. Like I told you, just support and resistance, learn how to mark it. Then draw your yes, then wait. You can always wait for these things on a higher time frame. Now I have a reason for mentioning higher time frame here. You see, we are finding these setups here on a higher time frame, 4-hourly time frame. And if you go down to a lower time frame, you know how much this would be. If I am doing this on an MT5, I can estimate the profit you can make. You can make just for buying the market from this point up to this point. And even on that higher time, if you go to a lower time frame, you might even find a more better entry that will reduce your losses if I thought the market wants to do a little retracement before it buys to the upside. So this strategy is something that can give you some good profit on a regular basis. It can give you some good profit. All you need to do is to always ensure that there's a little space, a reasonable space between where the candlestick closed bullish and where the next resistance zone is. The same thing is applicable to the bearish engulfing candlestick pattern. Let's look for a bearish scenario. Okay, like here, this is a bearish engulfing candlestick pattern right here. You can see the bearish candlestick is too big. It's too big, and the market, what it did, it had to retrace first. The market retraced first. That is the sense of saying we put this our stop loss just somewhere here above the wick. So the market did not get to stop loss. It still sold. It still sold. Now, if you go to a lower time frame, if you find this thing formed on a higher time frame and go to a lower time frame, you will understand and mark your resistance support. You understand why the market had to buy. There is, if you go down, you know why the market had to buy. It's a kind of a retest somewhere because this is a zone. It's a little zone here. Market has been buying from. So it broke through it and tried to do some retest, then sold back to the downside. But overall, the market will sell. So if you understand these things, you'll be trading with confidence. Even if you enter the trade and see the market is trying to go against your direction, you'll be confident that the market will still go in the direction you want it to go. That's why I advise you find these setups on a higher time frame. Find this setup on a higher time frame, like the daily time frame, or even the 4-hourly time frame. Then when you find it, you can go down to maybe the 1-hourly time frame, sorry, the 15 minutes time frame to find an entry. You understand? So that is it, guys. That is it, guys. So always try to find the stuff or the pattern. Let me just go through mother. So can find it again. Okay, this is it also. Somebody is talking. Please, do you want to ask a question? This is you want to ask a question? This is a bullish engulf. Somebody said, okay, you don't understand how I do those, my support and resistance zone. They are not my support and resistance zone. They are the market support and resistance zone. But I suppose you did not join us from the beginning. When you want to draw support and resistance zones, you first of all try to zoom out. Zoom out your chart. Try to zoom out. Let me just reset it, then zoom out. So when you zoom out like this, you're able to identify the points market has been, rejecting and, either buying or selling from. Like this, you can have a better view of the chart. You can see the market sold from here for this particular zone here. Market bought from here. Market also bought from here. Market also sold from here. Also bought from here. Also bought from here. It tried to sell again. Also from here. So that is one way of that's the way I marked it. That is the exact same way I marked it. So you zoom out your chart first. Try to identify those points that market has been trying to reverse or reacting. You mark them and join a line. So that is just it. It's very simple. It's very simple, and it's one of the basic things you need to understand before thinking of trading any strategy. You need to understand it. So always zoom out your chart. If you check other zones I have marked, that is the same thing I did. You can see market sold there, sold there, sold there, bought here, bought here, bought here. So you just join them and mark. You just need to zoom out first so that you can see it clearly. You just need to zoom out first so you can see very clearly. Even this one I drew here, you can see market sold from here, bought from here, bought from here. So that's how I draw it. Just need to practice and you'll get used to it. All right. So if you can always try to do this, it will help you a lot. You can always try to identify these patterns. You will be successful, guys. Look, can you still hear me? Can you hear me? Hello, can you still hear me? Please just.
Yes, sir, we can hear you, sir.
Okay, thank you. All right, so like I was saying.
Yes, we can hear you, sir. We can hear you.
Yes, we are with you. We are with you.
Good. So that is just it. What I believe you should learn from this class today is how to trade support and resistance. Just know that when you open the chart, the first thing you have to do is to mark out your support. Let me just check another chart immediately, so that we won't just maybe anybody did not see when I drew the, how do you call it, mark out the zones on check any of this space, even if it's 50. Let me see. Okay.
75 index.
You say?
25% index.
What did you say?
No, so it's okay. It's okay. Let's continue.
Okay. All right. So this is another page here which you can just mark our zones. So to mark the zone, first of all, I zoom out. When I zoom out, you see the zones appear more clearly now that I can easily mark like this. Hope you can see. Mr. Chung, I think that's the name, the person that asked the question. You can see how I mark these zones here now. Market bought from here.
Yes, sir.
Good. Market sold from here. Market bought from here. Market bought from here too. See the sales from here, the sales from here. And the market is now back at this zone. You see the reaction is trying to buy from this zone. So now, so the market can possibly buy back to the upside by maybe. What are you saying, please?
So I wanted to ask that must you focus only on the daily time frame? Like I'm seeing the 24 hours, the Can you go to other time frames like the 1 hour, 2 hour, or the 30 minutes?
Yes, yes. You when you do a top-down analysis after marking on the daily time frame. I will go to the 4 hourly time frame to mark. Then I'll go to the 1 hourly time frame to mark too. You understand? 15 minutes.
Yes.
15 minutes is my entry time frame. So I mark out these zones on the daily, the 4 hourly, and the 1 hourly time frame. Then, although when I go to the 15 minutes time frame, I still find some little other zones to take note of to know where to enter the market exactly. You know, so it's not limited to the daily time frame alone. So that's my first zone, the first zone I've marked. You can see there seems to be another zone somewhere here. Market try to sell from here and also buy. So we can do something like this. Can do something like this. So you can see is the buy or sell. Sorry, this is a buy. Market tried to buy here, sold here, and now sold here too. So that's another zone. Very easy and simple. So all you need to do is to wait for the market to give you confirmation on getting to like this zone here now. You see the market is reacting. So there is a chance the market is actually going to, buy to the upside. If it wants to buy to the upside, looking at let's just see the overall direction of the market. Market is actually, there's a change of character. So the market might want to sell. So if it decides to break through this zone, so it might just come back to do a retest, come back to do a kind of a retest, then sell to the downside, go below this low. But until then, we need to wait to see what the market is actually going to do at this point. If it starts consolidating, then after consolidating, it gives us a bullish engulfing candlestick pattern. Then you can see that the distance from here, from this point to this point, is large enough. So you can enter a buy trade and target this high here. And in most cases, you will make a huge profit from this particular setup here. You understand? But if during the consolidation, it forms a pattern that indicates it's going to buy, it's going to sell, or break through this zone, then you just wait for it to do that. Then it's going to break through this zone and it will sell. You target this particular low here because this is the recent low. This one is not really that, this one is somehow immaterial. This is the major low you should be targeting. So that is just it. And remember, if you want to see the engulfing candlestick pattern, remember where you have to see it. It must be above here. The engulfing candlestick pattern, if it comes to form after the market has broken down, then you see a bullish engulfing candlestick pattern forming here. Know that it's a trap. Instead, look for a way, look for an entry and start selling. If you see it forming here, look for an entry and start selling. But if you see it forming above there, above the zone, know that it's an indication the market is going to buy. So you can buy nicely. Like what happened here, look at this zone here. This is a bullish engulfing candlestick pattern, by the way. This is a bullish engulfing candlestick pattern because this is a small body candlestick, bearish candlestick, and a bullish candlestick followed it, which engulfed the previous bearish candlestick. You see what it did? It pretended as if it's going to buy. Instead, dropped the wick and started selling massively to the downside. You can see. So it is a trap. It's a trap. Once you see a bullish engulfing candlestick pattern forming on a resistance zone, all right, so that is just it. Then we can also mark another zone. You zoom out, look for another zone, look for where market has been reacting previously, and you can see there's a place here. You can see the sales from this spot. Market tried to buy from this point here, then it bought here nicely. You can see the buys along this zone. So this is another key level to look out for, And mind you, when you are analyzing the chart, just concentrate on the zones that are very close to your current price, to the current price. Look for a zone above it and a zone below it. Those are the ones that are important to you, not the one, all these, like this one here is not important for me at this point, except for the fact that this market is just in between. But the most important zones for me here on this particular pair is this one here and this one here. These two here, not this one. Until the market breaks through this zone, does a retest, then my focus will be on this particular one and this particular one. So those are the kind of zones you're supposed to be, taking note of. You must not draw everything, like mark out all the possible zones available on the chart. I don't know if you understand what I'm telling you. So that is it. Then after marking out on the daily time frame, I can go to the 4-hourly time frame to find other other available zones to mark. So right here, I can see a zone somewhere here. I can see a zone somewhere here. I can just draw this. This is a zone here. This is a zone here. Market sold from these zones and try to buy at this point too. Market tried to buy at this point, sold here, sold here, sold here, and market bought here. So this is a very important zone too to look out for if the market gets back to this zone. So you have to watch out what it's going to do, you know. Then after marking out on the 4-hourly time frame, I would want to go to the 1-hourly time frame, go to the 1-hourly time frame and also mark, and you know, all those things. It's very simple, guys. It's very simple. My time is this is about 6 something. I have something else to do, guys. Class. I don't know if anybody has a question from what I've said so far. Please, do you have a question from what I've said so far?
Actually, it's not really a question for me. I was having network issue and network keep logging me out. So and I really missed a lot from this lecture. So I'm pleading if you can just post this lecture on our group so that I can rewatch it and get the things I missed. Thank you.
Oh, sure. Sorry about that, Mr. Meka. Yeah, the class is recorded, so you will see the video on YouTube.
Okay, that would be great, sir. That would be great. Thank you very much, sir.
You're welcome. You're welcome.
Okay, on my entry, do I always need to see an engulfing candle on 15 minutes time frame, or it has to be on a higher time frame before I take the entry? Because at that point I tend to get confused. The engulfing candle, I see it on the higher time frame. What about the lower time frame on 15 minutes? What will I see that will give me a shot that this point the market is going to start going to my own direction?
Okay, nice question. This is what happens. You want to see the engulfing candlestick on somebody raised the hand. Please, you will say something later. Please, let me just respond to this question. You want to see the engulfing candlestick on the 4-hourly time frame or the daily time frame. Let's say you are seeing it on the 4-hourly time frame. Then you can enter the trade on that 4-hourly time frame. But if you want to be safe, you go down to the 15 minutes time frame. Let me just look out. Let me see if I can find one engulfing candlestick pattern here that we can use to do the illustration. Let me find an engulfing candlestick pattern. Okay, there's an engulfing candlestick pattern here in this consolidation. This consolidation, we have an engulfing candlestick pattern here. That's the bullish engulfing candlestick pattern. All right. So this point, if you go down to the 15 minutes time frame, let's see what we are going to have there. Okay. Good. Now you see what is happening here. If you can see what is happening where we circle, there is a pattern here on this 15 minutes time frame that confirms that the market would want to buy. Like here, please mute yourself. It's going back into the recording. See, first of all, we have this pattern here. The person that is using Samsung, please, you will ask a question very soon. We have this. You've seen this pattern already. That is why most times we need to combine some little other stuff. You see this pattern already. Now, the engulfing candlestick pattern is what it closed at this point. It closed at this point here. This way it closed. So you've seen that it closed here, and there was a breakout from this pattern. Then, and there is this is a kind of a support zone, a kind of a level. Then, you know, the market will not possibly buy to go above this level just like that. You know, so you would want to see a retest. The market has to come back to retest and buy from where it was previously, which is here. I don't know if I can make you understand this thing the way I understand it, because it's very important. If you enter a trade immediately on the close of the bullish candlestick that is on the 4-hourly time frame, except you put your stop loss down here, the market will put you on a floating loss from here to here before it starts buying in your direction. You understand? So to avoid that floating loss, you need to first of all look at the nearest support and resistance zone on this 15 minutes time frame. If you want to enter your trade on the 15 minutes time frame, you look out for the nearest resistance zone and look out for the nearest support zone. If the support zone, the resistance zone is too close, is very nearer to the close of that bullish candlestick on the 4-hourly time frame, then you wait for the market to retrace and come to this zone here where you see it's buying previously and get an entry. Once you start seeing rejections on getting to this zone, you can enter the market to trade. It requires some practice. So in essence, what I mean is, you see the bullish engulfing candlestick on the 4-hourly time frame, you go down to the 15 minutes time frame to see the pattern the market had created already. Then you check if there is a chance the market is going to retrace before continuing with the buys. The chance depends on the nearest support or resistance zone close to the current price. If there is a resistance or
go for
support
buyer
zone,
time to look if the confirmation.
please mute yourself. If the resistance is or support zone is very close to the current price, then try to wait for the market to do a kind of a retracement to where it has bought previously. Like here, this is another support zone here. Then once you start seeing some rejections, enter a trade. Put your stop loss somewhere down here, and in most cases, the market will never get to that stop loss. It will buy. I don't know if you understand what I'm saying. Please, who asked that question?
No,
I don't
sir.
know if you understand.
No, sir.
Okay. All right.
Yes, I do.
In fact, very clear.
Okay, thank you. So you just need to practice it.
Okay. Sorry, I heard you mention about change of character. So in this particular point here, how can I still identify change of character if I want to use that particular strategy to enter it?
Well, on this in the 15 minutes time frame, there's a change of character already now. Look at the change of character here. Let me zoom out. Let me zoom in. You see, we had this a high, low, lower high, lower low, lower high, lower low here. Now the market bought and went above this high here. So this is a change of character at that point. I don't know if you get the point. There's a change of character here. Do you understand?
Yes, sir.
Okay. So that is it, guys. Please, does anybody else have a question?
Yes, sir. I think he has asked my question. Like when you see bullish engulfing candlestick from higher time frame, then how can you be able to recognize it in the lower time frame and enter? And which is what you have done. But the last one that I'm not yet clear is that when you said that when we see some weak rejections, that we can possibly enter and possibly the market will not reverse.
Yes,
at the entry. So that's one that I'm not really clear about.
Okay,
and then in some of your videos, I think 2 of your videos, you talk about how to maybe like the closing of candles, maybe 4 hours or maybe daily candles. Then you now be able to go in the lower time frame to be able to make an entry. So I'm asking it in relating to this candlestick patterns, which you mentioned about engulfing candle. So that's why I'm asking that question alongside. It's like I'm asking 2 questions in one. So that's the answer. Yeah. That's my question, sir.
Okay, like if I understand you correctly, you are concerned about entering after seeing rejections, right? And also going down
yes,
to
after
lower
rejection
time frame to find a good entry.
Yes.
Okay, good. So now what happens is this: when I say entering a trade once you see the rejection, is because first of all, This is a support zone. You can see market rejected this zone and started buying to the upside. Now, another idea, because there are things you have to look out on the chart. You can see we had a bearish engulfing candlestick pattern here. And it's forming and resting on this support. It's almost resting on this support zone, which indicates that it's not actually going to sell. The bearish engulfing candlestick pattern is a false signal for a sell, but a good signal for a buy. So then you see immediately this candlestick was formed. The next thing that happened was the market started selling a little. It only dropped a week, which is a rejection. And on the zone where we have been having other rejections, because you have to look at what happened previously in the market to compare to what is going to happen in the present. So you see, once the market gets to this zone and started rejecting, then it closed bullish, there is a chance the market is going to buy. So personally, I would want to enter the trade. If I want to follow this concept, I would want to enter the trade on the close of this bullish candlestick. Then if I enter the trade on the close of this bullish candlestick, my stop loss will be somewhere here. My stop loss will be somewhere around here, because I have the confidence that the market would not easily get to this particular stop loss here, because the market is actually bullish. You know, the market is bullish. So first of all, you will know the direction of the market. So whatever the market is going to do, there is although there is a chance that the market can break through this zone, but based on the structure the market is creating, based on the movement of the market around this zone, you'll be convinced that the market is not going to buy. It's not going to sell down this zone. So wherever you put a stop loss below this zone like this is safe. The market will maybe put you in a little floating loss, then buys to the upside. Or if you decide to go to a 5 minutes time frame to check out what you can possibly get, maybe to help you go get your entry on a lower time frame. So let's just see what we can get there. Again, this is it. So you can see on a lower time frame what the market did. See what the market did on a lower time frame. It closed here bearish. This is the week that the market dropped the other time on the 15 minutes time frame. So it closed bearish, and the next candlestick bought to the upside and still closed bullish. You see the movement. So even if I had entered, maybe let me find an entry on the 5 minutes time frame. I think I wouldn't have entered the trade immediately on this particular, or maybe I would enter on the close of this 5 minutes candlestick that closed bullish. So most times I try to combine what I see on the 15 minutes or the higher time frame with what I have on the lower time frame. There is a trade I took recently, and I shared the results in my Telegram channel. If you want to trade some of this, if you want to go to the lower time frame most times to get an entry, you might end up getting confused, because there are times the market will not give you a very clear candlestick pattern that indicates the market is going to buy, is going to sell. You understand? I don't know if you guys have experienced something like that. You might go to the lower time frame. What you'll be seeing is different kind of market formation, different candlesticks up and down. But if you go to a lower time frame, you will just see a single candlestick that tells you the market is going to buy. So most times I enter the trade on a higher time frame. I enter the trade on a higher time frame with a good stop loss that no matter what the market does, I know the market is not going to get there. And before then, I am very convinced, based on my strategy and my analysis, that the market will be going in my direction. You understand? So most times, coming down to a much lower time frame, I do not do that. Most times I do not do that, except if I go to this lower time frame, then I see the market is giving me a confirmation it's going to go my way. Then I would want to, enter. I would want to, follow the candlestick patterns I am seeing there. Like here, but for this particular pattern here, what you have here, the only way I would want to use 2 minutes time frame is applying my continuation trading strategy. But in that case, I would enter the trade very later than when I would enter if I use the other pattern, the other strategy, because this is a continuation. I was not supposed to bring in this one here. This is a continuation here. And since we know the market wants to buy, so if I want to wait for the breakout or wait for the breakout, then wait for maybe a retest. Then I will be entering the trade around somewhere here like this. I'll be entering the trade around somewhere here. That's what it means. So that is why sometimes I don't go to this 5 minutes time frame to check, but sometimes I go to the 5 minutes time frame. And if you come to the 5 minute time frame, the market gives you what gives you a very clear pattern, maybe candlestick pattern or chart pattern. Then it can help you reduce your stop loss. To help you reduce your stop loss a whole lot. Let's say maybe I got to this I got to this 5 minutes time frame. Then I saw a bullish engulfing candlestick pattern here. I can enter the trade immediately, and you see my stop loss will be far more reduced compared to the stop loss I will set for my entry on the 2 minutes time frame. So, but if you do not find that pattern, there's nothing else you can do. Go back to the 15 minutes time frame, enter the trade, but ensure that you've already confirmed the direction of the market on a higher time frame to be on a safer side. So that's what I think you'll do. And even here that we have, you see, we have a double bottom here. If you want to follow the normal principles of trading a double bottom, you will wait for the market to break above this neckline, and this way you would want to think of entering the trade. This way you will think of entering the trade, which is still late compared to entering the trade where we found that candlestick pattern on those rejections on the 15 minutes time frame. I don't know if you understand. If I am trying to confuse you the more.
No, sir. I'm getting what you are saying, sir. It's true, sir.
Okay, so it requires practice, like I used to say. Just practice. The last thing I will leave you guys with, because time is already going. What you need to do is to backtest. Whenever you see something like this, maybe you see a new strategy, backtest. The only way you can backtest is to open your chart from the daily time frame. Try to identify what I've shown you. Once you're able to identify my daily time frame, go down to a lower time, go to the 4-hourly time frame, try to identify. Go far back left of the chart as you are zooming out. Go back and be taking. Just what you are doing, you're not actually trading, you are just marking. Try to identify those things I said. You marked your resistance zone and your support zone. Then you try to identify the bullish where your bearish engulfing candlestick pattern. Maybe you find it, you mark. Just keep marking and marking and marking. As you're marking, you are also looking at what happened after the pattern was formed. If it is in line with what I told you, you understand? You are seeing the pattern there, and you see what happened when the pattern was formed. You keep on checking, you find another pattern, and you see what happened when the pattern was formed. It gives you a better understanding of the strategy. It's far better than just going into the chart and you start trading the strategy with your demo account. You might end up not even understanding the strategy. But if you have time to backtest the way I've shown you, what have I shown you? The engulfing candlestick pattern forming on a support or resistance zone. You open your chart, go to a higher time frame, you mark out your resistance and support, then you find those candlestick patterns formed. Then look at what happened when the candlestick pattern was formed. Did the market go in the direction it was supposed to go, or it did not go? If it went, then you take note of that, meaning the strategy works. You go to the next one, keep on moving to the far left until you go to where the market stops you from far back.
What is the meaning of all this? Take that thing and go and keep us this up.
Mrs. Florence, you may need to mute your mic, please. Thank you. So you go to different time frames and you do this. Guys, I'm telling you, you can do this thing I've just told you. Different pairs, different time frames, just study. You can just tell yourself, the whole of this week or the whole of the next 3 days, this is what I'm going to do. Before the end of those 3 days, guys, you will master this thing I've just told you. Master that particular strategy. And then you discipline yourself. Tell yourself, until I see a bullish engulfing candlestick pattern on the 4-hourly time frame, I will not take any trade. You just wait for it. Mark out your zones on all those space you have. Say until you find a bullish engulfing candlestick pattern or a bearish engulfing candlestick pattern on a support or a resistance zone, I am not going to take a trade. I'm not going to look at and do anything. So you wait. Once you see it is formed, then you try to look for an entry and you enter your trade. You practice. That is the only way you can discipline yourself. That is the only way you can discipline yourself, guys. So I have already talked too much. The class is about to end now, guys, because I have other things to do, guys, and I know you also have other things to do. Maybe you have football to go and watch. Today is Saturday.
Thank you so much, sir. Thank you so much. We're grateful.
So you're
Sir,
welcome.
please, I know. Yes, sir.
You're welcome.
I will employ you. I don't know, maybe on your YouTube, maybe you have to put it maybe like in a way that like do this daily candlestick or 4 hours candlestick formation, to know maybe like for a quick scalp. Because I think I saw it on your YouTube and the way you explain it, and I really want to understand it better. I don't know, not for maybe like arranging class for this like this. But I
Okay.
just wanted to like maybe like do a content on that one because I
Okay.
like it as well.
It's okay. So getting set up on daily time frame and the hourly time frame, I think that's what you
Yes,
mean.
yes, yes.
Okay.
Thank you,
All
sir.
right. There's no problem. There's no problem
Yes, sir.
about
God
that.
bless you, really, sir. Thank you, sir.
Amen. It's okay. Bless you
Yes, sir.
too for having the time to, without you guys,
Yes,
I
sir.
won't even stay here. Like
Yes, sir.
if I fixed this class, then I came online, I was the only person online. It wouldn't have meant anything.
Yes,
So
sir.
I
You're
also
right, sir.
appreciate you guys for having time.
Yes,
It's
sir.
education. If you have passion for
Yes, sir.
something, go for it. Learn it.
Yes, sir.
Learn it.
Thank you, sir.
All right.
Yes, sir.
Then for
Okay,
some of you that have
sir.
been asking questions about my mentorship, guys, I don't like talking much about my mentorship training because it's only those that attend my mentorship that understands there's a difference between a lecturer and a teacher. You understand? So if you maybe I have 3 levels of mentorship trainings. I have the beginner to advanced level, is $150. I have the intermediate level, that one is $100, and the strategy mastery bootcamp, that is just 2 weeks, $50. So maybe from time to time when I have these classes like this, I used to do some offers. I used to do some offers for people who are interested, and you have been because so many people have been asking me for the mentorship and for the strategy mastery bootcamp. Then they try to price down and all those things. I understand that it is difficult. The economy is harsh, $50 is huge, if you convert it to naira, I understand. But the information you are going to get is far beyond that $50. It's far much more than that amount. The value is far much more. So now I'm just going to open a floor to people, those that have been contacting me and whoever is interested. If you want to enroll in my strategy mastery bootcamp, which lasts for 2 weeks, and I am just going to do it because I want to make it a group, not one-on-one mentorship. My one-on-one mentorship stands, the price stands because it takes more time. Anybody that enrolls in my one-on-one mentorship understands what I'm talking about. We discuss, we talk at length, we teach, and we do a whole lot. So, but for the group training, it is also very, 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 very useful, very, very powerful if you want to. So, if you can pay $30, then I will just give you an opportunity. But trust me, whatever you get is far much more valued than that money you are going to pay. So perhaps you did not plan about this, so I can give you between now and Friday. Okay, let me just give you 1 week between now and next Saturday. If you are interested, just send me a message on Telegram. Then I'll give you my details so they can make the payment. Then I add you to a group where I'll teach you. I do live trainings like this. I don't have recorded videos. Maybe when during my classes, then I do some recordings and I post it for the concerned students to go and watch again and practice what I have taught them in class. So it is a live class. We interact. You ask questions and I answer, and you do what I ask you to do to help you succeed, guys. So it's just an opportunity. $20 off. Then do not waste time, guys. Do not waste time. The year is coming to an end. All right, guys. So let me leave that alone for those who are interested. But meanwhile, whatever you've learned in this class today, guys, try to make sure you practice them. I promise you, you will succeed. Forex is for everybody. Anybody that says Forex is a scam does not know what he's doing. It's just those people that are leaving money for people to trade for them, and they blow up the accounts. They don't want to learn, So, but for you, I believe before you can spend time to join this class up to this length, you are very serious about it. Don't be in a rush. Just take it slowly. You will succeed. Remember, people spend years in the university. If somebody goes to university and spend up to 4 to 5 years, some spend up to 6 to 7 years to study a single course, coming out, it doesn't make any money. Sometimes you can graduate and you stay for more than 5 years or even 10 years. Maybe the job you come to get is a job that is paying you 70,000 naira in a month or 100,000 naira in a month. And if you even find a job that is paying you 100,000 naira in a month, you have to work. You work. It's not a job you can just go and I don't know how to put it. It's going to be very stressful. Not that easy, guys. Let alone having a job of 200,000 naira in a month. But if you can dedicate like 3 months to yourself to learn and practice these things, guys, that 100,000 naira is something you can be making every day on a regular basis. So that's why I advise, just take your time. Don't be in a rush. Get the knowledge, practice it. Don't rush to fund your account until you master a strategy that works and you confirm it's working on your demo account. Don't rush to fund your account. You will lose it to those who are making the money. You understand me, guys? It's just an advice. So have a wonderful weekend and
sorry, sir, before you go, sir, please, sir. I'm actually interested, but can you just give us an extension of maybe like 2 weeks rather than 1 week?
2 weeks?
Yes.
Isn't it too far?
Let me say it this way. I don't know, maybe for the people, I don't know. Maybe I should inbox you, Sha, because it's based on your decision, but I know that you are trying to help us consider the fact that situation of the country. If you can do it more often, like a kind of just like the way you do mentorship, you can still look for some set of people and do it. If it is too far for that 2 weeks, then maybe there will be other time so that we can run it concurrently that way. And we can also wait to the time that maybe when we gather some money, you get. Because I'm really serious with this, but based on what is at hand right now, for me to gather some money to do that. So that's why. Also, God knows, when I saw your post on this particular one, I was every day and every time I was taking time to know. So that's
okay, I understand. So how many people are interested in the training and would wish an extension of 2 weeks? If you are interested, just type yes in the chat. Let me see. If you are interested and you need an extension of 2 weeks, just type yes in the chat. It's okay. I think I think you're the only person that needs it. So you can just send me a message on Telegram much later.
all right, sir. Thank you, sir. Yes, sir.
All right. So let's have a wonderful weekend ahead and
thank you very much, sir. God bless you, sir.
Yeah.
Really
Before we go, please, I want to especially on behalf of the group this evening to appreciate the lecturer. Thank you so much, sir. We really appreciate you. We are really blessed today. We are really, really blessed. The Lord will continue to bless you in Jesus' name.
Amen.
Thank you so much on behalf of the group. Thank you, sir. We hope to hear from you some other time.
Sir, the same goes with me. I really want to appreciate you, sir. God bless you.
I'm really
Thank
blessed
you so much.
Really,
we really
blessed.
appreciate.
Really, really blessed.
We really appreciate.
Thank you so much.
Bless you too.
you,
bless you too. Bless you too. All right. Thank you very much. Have a wonderful weekend, guys.
And you too, sir. Yes, sir.
All right. Bye.
Yes, sir.